Brian Armstrong and Coinbase came out and said, we do not support this. We're pulling our support. That led kind of a total freeze in terms of, action and momentum and movement. And so that total freeze, at least initially, kind of freaked everybody out and said, wait, are we done? Is this over? Is it dead? And I think the answer ultimately is no.
Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed.
Wow. All right. We're in it.
Are we recording?
Yes. We're recording, and our producer and editor and magnificent behind the scenes team is on an airplane.
We didn't know they were watching this, so sorry about all those things we said.
The airplane Wi-Fi. Let's go.
All right, so we got some stuff to talk about. Let's go through.
I'm glad the Verizon cellular coverage outage didn't kill the Wi-Fi.
Yep. So basically, since last time, we're in two new foreign wars. Market structure is happening. Lighter has launched. The AI trade has advanced a little bit. The Fed chair is almost arrested. And I think there may have been a rate cut, but that's what we want to cover today.
I mean, the last time we checked in was before the end of the year, before the holidays. So a lot of things have happened.
Right. Maybe not all of those, but certainly most of them.
Yeah.
Let's talk about market structure, though.
It's the timely news. We're recording this on Thursday, January 15th. It feels like everything has happened in the last 72 hours. It's all go, it's no go, it may be back. Who knows kind of like where things stand right now. But the run of events has been, I think Senate Banking said that today would be the day that they vote on passing it through committee. The draft text that was put out by the banking committee was floated, I think, at like midnight Eastern on Monday. That sent basically everybody and both sides into a frenzy. You had the opening of amendments, which led to basically the industry coming out and saying, we need to get rid of this, we need to change that. And in particular, Elizabeth Warren and Senator Reid coming through and saying, rip all this out. This doesn't work. The number of amendments that like you could see on the page from Warren was like an entire page of amendments, which all of them put together negates the entire purpose of the bill. So those are all non-starters. But where things landed, I think, are I believe yesterday afternoon, Brian Armstrong and Coinbase came out and said, we do not support this. We're pulling our support. That led kind of a total freeze in terms of, action and momentum and movement. I think, and so that total freeze, at least initially, kind of freaked everybody out and said, wait, are we done? Is this over? Is it dead? And I think the answer ultimately is no. You've got David Sachs coming out tweeting, hey, this is part of the process. You've got Chris Dixon coming out and saying, we're supportive of, rules of the road, like entrepreneurs need to know what these rules are. This is positive for the industry. We're ready to work on this. I think everybody kind of, had the immediate, well, if I can't get what I want, then nobody gets anything perspective. And now I think standard heads are finally prevailing, and there will be some sort of amicable resolution, let's say, is my read of the situation. The other thing that's going on in process is banking is one half of it. Senate Ag is the other half. Senate Ag has said, I think it's the 27th or the 29th of January, that they're going to put through their draft and have their own markup and vote. The idea was that, and so at the end of the day yesterday, or actually maybe that was today, Tim Scott officially pulled the vote. So the vote has been postponed in Senate Banking. There is still a question as to what Senate Ag does. Maybe there's an amicable path and middle ground that can be met basically in the next 2 weeks. I think there's a lot of politicking going on right now. There's a ton of horse trading going on right now. We should get into it and talk about kind of like what that actually means and how that's working. But I do think that, that's kind of the lay of the land, at least. It'll be interesting to see how this whole episode of House of Cards plays out.
Yep. The other thing is their stocks both went down by like 8% today. And I think it was generally a bad day for the market, but specifically, or not like a good day for crypto. I would say a bad day for the actual stock market. But I think really what that's being labeled as is, the failure of this act to get through, at least on this pass, has not materially changed the condition of their stock prices, but it has impacted them. And so I don't think, now, especially given that feedback, given the pause, that market structure is dead. I would say Polymarket has, I think, at 56, 60%. Probably I'm a little bit higher than that. And if you really read the bill, which if you haven't, you should, and if you don't really want to, put it into ChatGPT and just ask it kind of topical questions. But this is landmark legislation for U.S. capital markets. It's probably the biggest change in terms of adding a new asset class since the Howey test with securities and then fixed income becoming popular in the 80s and 90s. But it's super exciting, and I think the industry would thrive under this. I think, the chance that it doesn't happen is probably smaller than it does, but I think what that would be like is, the 10 to 20 really big incumbents using their balance sheets to, kind of consolidate market share in the space, and then going off and using that to bridge to TradFi through other regulated vehicles like ETFs, things like an IPO for like a Tether. The DATs probably become more important. And so there's a lot of just like kind of different stuff that comes out of this. But I'm still positive, and I think, if this does happen, David Sachs is definitely owed a debt of gratitude, and his tweet probably came at the exact right time for people to just relax a little bit and, hopefully go forward with a better thought out plan.
I mean, I think totally agree with all of that. I think what will happen is some sort of relenting on certain points to basically like get the main points that they want. And I do think that it's not just coincidental that the proposal to cap interest rates on credit cards happens at the exact same time that it seems like the banking industry is pushing to ensure that stablecoin yields are not possible. And so what I'm meaning with this is you got Brian Moynihan, the CEO of Bank of America, who's coming on and giving an opinion, this week or yesterday, saying that $6 trillion of assets, of deposits, will leave the U.S. banking system if stablecoins are allowed to pass back yield. Stablecoins have been allowed to pass back yield basically since the start. They got codified. That got codified in Genius last summer, and you still haven't seen deposits, leave the banking industry. First and foremost. Second off, you've got JP Morgan hitting record net interest income last year in what they've announced. And anybody who has interfaced with a banking provider or has a checking or savings account recently knows that you put money in, the savings rate that you get is single-digit basis points. So what we're talking about isn't like, oh, well, they're going to leave to go get 3.5% at Coinbase and screw us. It's like, it's been so low that nobody even cares about that in the first place. So I think that that's just like, it is a narrative. It isn't reality. And he's kind of like taking data points to prove his point that aren't real. And the second point is on this credit card capping interest rate bill or the proposal to do so. Many of Bank of America and JP Morgan, the two largest net interest margin accruers from a banking perspective in the country, have massive payment services, payment businesses. And if you were to take Chase and say the 26 to 29% interest rate that Chase charges its customers is capped at 10%, there's a couple of things that happen. The first one is revenue goes precipitously down. The second is customers will end up finding out that their credit cards are canceled because they are in a risky band that requires Chase to price them above that 10% threshold. It isn't like we can, so we will. It's like you are because your credit score is 550. So I think that there's a real issue with this that will hurt consumers, but I think the banking lobby knows that you can't fight a two-front war, especially in Congress right now. And so they're going to be forced to choose. Do you want to give on stablecoin interest and have that be or have that be the fight that you have the last stand on, or do you want to try to fight two wars if we bring this capped interest rate concept into play? So I think it's pretty savvy if the overall intention, and it seems pretty timely to not be just a coincidence. But if that is the intention of basically pulling the banking industry back from stablecoin yield and saying, fine, we'll cap interest rates, then we'll see what it does. But, we said this earlier today in the office, but it is paradoxically, this may be a bullish pause.
Yep. It's also worth considering what consumers stand to benefit or gain from legislation like this. I tweeted this earlier, but imagine a world where nobody can access OpenAI or Anthropic shares forever. Imagine that they don't go public at all. So you have no equity exposure to anything. And then imagine a world where you can't earn yield. You have no fixed income or debt exposure to anything. That's just like a really dystopian version of the world that I don't think anyone should root for. So my hope is that this legislation does happen. But there's probably a good reason for at least, taking a bit more time to get it done. But I think people downplay the effect of legislation like this. Similar to how, Genius created so much market opportunity, excitement, and liquidity. I think that is the similar dynamic that plays out if this passes. But let us talk about let's talk about Fed chair stuff, actually, and interest rates. So
Yep.
Powell got, I guess prosecutors looking into him. Trump has now kind of backed off that threat to replace him. It seems like there's, at least a couple locked interest rate cuts this year. JP Morgan came out with the expectation for a hike, which I think is just kind of way off market. But I think generally what we expect is that rates will get cut and there will become this thing called, like a steepened yield curve where the rates are really low at the short end, but at the long end, they're still high. And so, at the long end, that would be kind of like where 4%, 5% is today. The other thing that Trump has directed the, at least housing chair to do is use $200 billion to go off and buy mortgage-backed securities. And I ChatGPT'd this earlier, but the max pace during COVID for MBS security buybacks was $30 billion. So if you do the math between now and where the midterms are, it's 6 months divided by $200 billion. That's like 30, 35. So maybe housing rates come down as well. But what's your take on this entire environment?
Not QE, but QE.
QE in so many different formats.
Look, this is not quantitative easing. We're just going to ease the quantitative. I don't know. It's like,
is the housing market ever going to come back?
It's pretty funny.
Back, and we've talked about that, but like, what about the rest of the world?
Well, yeah, there's two elements of the housing market. There's the value of the house, and then there's the cost of capital to buy the house. And right now, cost of capital is effectively never been higher, but also the cost to buy the house has never been higher. And so you've got this entire generation, or potentially two at this point, they're just unable to buy homes. And I've had this conversation, I've listened to the podcast with a few of the podcasts with Nick Shirley over the holidays, and one of the standout comments that he made is like, our generation. I think he's like 22 or 23, maybe a few years older than that. But he's like, all my friends, and in San Francisco, this sounds crazy, but in the rest of the world and the rest of the country, this is probably the sentiment and the feeling is he's like, all my friends, none of us can buy homes. And it is kind of what everybody in the previous generations, whether it's Minnesota in the Midwest or any of the southern states, Rust Belt, wherever, you're going to find most people want to be able to buy a home. They want to buy a $250 starter home and be able to deduct the interest payments from their mortgage and have that be kind of like an economic engine that works for them as opposed to dumping rent payments every month. And so I think you have a total, and this is what I think has given rise to meme coins, to mimetic trading, probably some of the speculative nature of crypto as well. It's sort of this anxiety that the generation has that is unable, that they're unable to participate. And it's kind of like, this is their shot. This is their chance. And you've got on the front end, impossible, thresholds to even get a house to live in. On the back end, you've got AI chasing you and, going to steal your jobs. Try being a 22 or 23-year-old, knowledge worker these days as an entry-level analyst at a bank or a consulting firm, or even a tech company. And it's like, well, writing code, building PowerPoints, doing models. Like that's like, at least from, the, I would say, quote unquote, most attractive jobs, coming out of college a decade ago, those are going away. And so it's this insane kind of questioning of purpose, but also capability and viability from an economic perspective. So I think the big hurdle, and you're starting to see this even in California with like Tom Steyer coming out as a potential run for governor. I guess he's running for governor. His entire platform, or at least all the ads that I see, are all about affordability. The 2026 midterms are all going to be about affordability. It's probably going to be a major subject of the 2028 election cycle as well. Affordability. What that comes down to is, do you have a job where wages are increasing and you have sturdy structural, you have low fears of losing your job, either due to competition or outsourcing or technology. And are you able to participate in the economy? Or do you feel like your parents' generation was more advantaged than you are? And so being able to prove that, I think tactically, it's hard to do right now other than affecting housing. And housing is going to be the biggest asset. It's going to be the most uniform, level way of participating. It's usually the older generations that have large 401ks who have access to the public markets, or exposure to the public markets. So I don't think equities markets are the best way to attract this as well. Going after housing, I think, is the right move. It's just a very, very hard, very large problem.
It's a very hard, very large problem, and most people's, and I don't think this will hold true for the Nick Shirley generation, nor will it for millennials. Like I think millennials, and we're not elderly millennials. I found out about that term recently, but we are probably middle of the band millennials. I think that is, most millennials don't own houses, but most people do, and most people have most of their net worth tied up in it. So as rates go down, things like refis or HELOCs, and that creates liquidity in the economy. The other thing about housing, which is interesting right now, and like I think our hope is that we can start doing financing for things like housing at some point through crypto rails, because the liquidity is so good. There's government guarantees, and there's actually decent interest rates. Fannie and Freddie Mae are actually going public. Should be this year, and that will be the first kind of the mega IPOs to hit. Apparently it's worth between like 400 and 600 billion, which is a lot of money. They would raise 30 billion in an IPO, but just like adding another of these IPOs to the list of this, SpaceX, I don't think Anthropic or OpenAI go public this year, but I think once you do have this like string of IPOs, like that is when a potential top for an equity market starts to appear. Obviously, it doesn't matter if you're building something that has enduring value over multiple years, but just that quantum of liquidity coming out of the market would be tough. And I think some of it could flow into things like crypto, and worth doing like kind of like BM&R update and crypto update. But the ETF flows since the beginning of this week, January 15th, have been really strong. Bitcoin had 850 million yesterday. I think ETH had almost 180 million. Solana had inflows too. So it feels like there is kind of this this flow, and like the animating dynamics of this market are the DATs and the ETFs. And if they get rolling at the same time, it can be a very positive flywheel. And I'm looking at BM&R shareholders who are in I think it's the Venetian in Las Vegas.
Oh God,
it's like line around the casino to get into the BM&R shareholder meeting. So like Tom Lee is kind of killing it, and he also made a 200 million investment in Mr. Beast that we were talking about.
Yeah, we should talk about all of this before moving on to like crypto and BTC ETH in particular. I'm curious your take on what happens with this Fed chair, like closing the loop on Jay Powell.
Oh yeah.
How do we feel like? But like, what do you think the macroeconomic outlook is from a Fed perspective going through the rest of the year? I know JP Morgan's got hikes. There's like 1 to 2 cuts. I think there was a tweet last night from Trump saying both the Kevins, look pretty good. I'm where are your odds in terms of what happens with the Fed chair and how that affects rates and midterms and all the things?
I think most people were surprised that the market didn't crash when the Fed Powell arrest thing came out. I think, especially older people have such respect for the Fed as an institution. And I just don't think that's shared by anyone under the age of 40. I don't think there's much difference in terms of it's just going to be max aggressive cuts. Kevin Hassett, Kevin Warsh, one of them. I could also see it being Rick Rieder from BlackRock, which I think it would be kind of uniquely bullish for crypto because he's like part of the crypto. He's part of the firm where their number one product is the Bitcoin ETF. So like Rick Rieder is my dark horse. David Zervos, if you haven't looked up a picture of this guy, you should. He was my ultimate candidate, but he looks like a magician, so he probably is not going to get the job. But I think it's just like, I don't know, 100 bips of cuts. That's pretty bullish. With, housing, with all this other stuff, it's bullish.
Yep, agreed. Should we talk Tom Lee and ETH? Because I think the the big one. So there's the BitMine vote. I think that was supposed to go through by midnight tomorrow or last night. Yep. The shareholder meeting today. The vote. I think it's worth it to talk about kind of like what's going on behind the scenes here. And I don't know. We've tried to collect information that leads us in a direction of kind of like what's going on. So there's a vote to approve the compensation package for Tom Lee. And there's a couple of elements to it. There's an ETH percentage target, which is 4% or 5%. And then there's also a price target, and there's also a market cap target. And so those are the elements that will kind of unlock value for Tom Lee. So the expectation is, and the 4% is kind of that minimum or the first tranche of unlock for him. And he's almost there. And one thing that was actually picked up by
wait. He's got 3.8, or he's got maybe 3.9 million ETH, and I think it's like 4.3 or 4 is like the watermark for the first tranche of incentives.
4 exactly.
To date, Tom Lee has been basically given kind of like this very generous but flat package of like, here's these shares, but the one that he's up for right now is hundreds of millions of dollars, maybe even more, if he hits these thresholds. And the thresholds are 4% and then 5%. And so if he wants to hit 4%, he's probably got like a few 100,000 more ETH to buy. And there's some speculation that this options position that he may or may not have on is that exposure. And then the next target is like almost 1.7 million ETH away, maybe more. So 1.7 million ETH is what is that? $5 billion?
Something like that, give or take.
Maybe more. It's like $6 or $7 billion. So that's to hit his next incentive target is he needs to buy 6 to 7 billion more of ETH. And I think kind of the backdrop, just to give everyone context, is like if the ETFs are 200 million a day, and then Tom Lee is moving at 100, 200, 300 million a day. That's especially right now, that's significant market impact with a bunch of people short the market and maybe ETH specifically too.
Yep, agreed. And so what one of the bloggers has picked up is basically this
the giver.
Right, that's right. The giver has picked up this effect of whenever there's an announcement, they disclose the number of ETH that they hold, purchases, cash raised, and cash balance. And so there's been this $1 billion cash amount that's been basically stagnant, while there's also been additional cash raises, as well as some ATM or as well as some ETH purchases. And so I think, the rumor or kind of the hypothesis that the giver has come up with is that Tom Lee is actually buying in the money call options. And the in the money call options, there's some expectation that the in the money call options, because they're short dated, don't have to be disclosed in the 8K. And he is potentially just rolling them whenever he gets to that expiry. But that this gives him some ability to get that ETH exposure And he's probably even over the 4% if these were to be exercised, because there's $1 billion, of like ETH notional that could be exercised with these call options. That, hypothesis is also tied back to what happened in August when there was, frankly, the same effect where they started buying call options to get the exposure. They were able to exercise them. This also coincided with kind of an ETH squeeze, back then. And that's when ETH hit 48.50 or whatever the last high was, right around this time. And the expectation was a lot of this was being driven by it. What you didn't have back then, what you had back then, which you don't have now, is you had a massive I think 3 million ETH unstake happening. And now the opposite is true. There's 0 in the unstaking queue, and there's actually a lot in the staking queue. So you've got the reverse effect, which is that more ETH is being locked up as opposed to being unlocked. It seems like the notional size of this options call is actually about 5 times larger than what was happening back in August. And coincidentally coincides with the BitMine shareholder vote happening last night, today. And also, I think, this brilliant move by investing $200 million into Beast Industries. And so I think there's a lot of stuff that you can kind of read within the tea leaves. And, Mr. Beast gives you distribution, but also the other angle to this too is like, how else? Think about how many people would love, how many of his most fervent followers would love to be able to get access to Beast Industries. Well, now you can, because BitMine, the company, owns 4 or 5% of Mr. Beast Industries, in addition to all the ETH. But that's a great mechanism for getting more distribution for your shares, attention for you, but also making Mr. Beast just a super huge believer in Ethereum. So I would say that there's a really, really strong bullish case going on right now. And I don't know if this plays out in a matter of days, weeks, or maybe a month or two, but it is something that's happening in real time.
Tom Lee's putting on a clinic on how to run a company for the 21st century. And also he's just a capital assassin. Like, he will raise at MNAV and he will ditch playbooks and create new ones, use options. It's just an absolute clinic. I think whenever it was in Q1, when everyone was very down on ETH, I don't even think anybody could have imagined a bull case like this, where it's like, okay, Tom Lee is going to be the CEO of Ethereum, and then he's going to get Mr. Beast on board as well. It's very, very interesting, and he's got a cult following of this stock, and that's something that I think we've noticed over the past year. Is like, there's certain public equities, like some of the Bitcoin miners that have turned HPC, some space companies. Now it's kind of broadening into like robotics and defense. Like, there's things that have like cult stock status, and I think BitMine is certainly one of them now. And the volumes as well for BitMine are picking up, which is really what you want to see if he's about to kind of shift directions or kind of put on some turbo boosters. But what was the volume today? Yeah, I mean, 46 million shares of volume at $31. That's like $1.5 billion of volume in a day. That is. I would think that the real volumes from ETH and Bitcoin are probably pretty similar.
Yep.
So kudos to him, and it seems like this stock may turn from the alchemy of 5% to we're investing in the future of the best creators on earth to this is Tom Lee's. This is like Delta 2 exposure to Tom Lee. Like, if you like Tom Lee, he's going to build the future in the stock, and you can invest in it, which I appreciate. I think there's more room for innovation on public equities and corporations that have someone strong like Tom at the top. So we wish him the best, and obviously we like ETH too, so that's great. Let's talk about AI stuff. So one of the things that is starting to happen is people are leaving these other labs to go back to OpenAI. And I think AI is important for crypto because that is where all the capex is that these stablecoins will go off and finance. So at some way, shape, or form, if your stablecoin is passing back yield, it probably comes from AI at some level, especially as these things get to trillions of dollars of scale. but at the same time, kind of like the labs, which honestly remind me of the L1 blockchains. It's like when like, you know, Gav York split off from Ethereum, and then like Polkadot happened, and you know, Polkadot didn't end well, but certainly looked like a competitor for a little bit. What do you make of these people fleeing? Is this like a rats fleeing the ship moment, or is this just like normal consolidation within
people coming back to OpenAI?
Yeah, like the Thinking Machines, the 3 founders of Thinking Machines left. The other 2 founders of Thinking Machines to go back to OpenAI. People are now saying that SSI is going to be the next one.
Yeah, I think it's interesting. It's hard to know what the internal politics are, but I think it's extremely difficult to, frankly, start a scaling any type of company, but even an AI company, if you've got like a starting valuation of $5 or $10 billion. You're able to give huge equity incentives because on paper it's worth that. But the problem is you have to grow into that. You have to like scale into that to be, you know, something that's potentially able to be realized. The other element that I think came through in some of the texts that I think Andre Karpathy had something like $4 billion of OpenAI stock. That there's another $10 billion of OpenAI RSUs that were allocated to employees. So it's not like, you know, OpenAI isn't willing to say, hey, like we can give you some serious dough. Also, this will be worth something, potentially even more than what we're giving you when we go public in the next, you know, 18 to 24 months. So I think that there's like a real kind of opportunity cost from going and joining these companies, or at least staying at them. But the other element that I think is important to call out too is, so just taking a step back in terms of you know, the AI space right now. What has fundamentally changed in the last, basically since GPT-5 came out, which I think was August or July, is that OpenAI was in the lead. And then at the start of the year, everyone's like, Google's never going to be able to do AI. They are going to have to cannibalize their entire business model just to be able to do AI. And you also kind of had Anthropic, which, you know, they had this like kind of almost ESG perspective to AI that I think kind of made them look inferior from a competitive standpoint, just like they weren't trying as hard as OpenAI is. And you also had all these rumors of like Sam Altman paying $100 million or Mark Zuckerberg paying $100 million, Sam Altman countering, like there's this talent war going on. They're willing to play the game. Mark Zuckerberg's buying scale or investing in scale for $15 billion. Like there's a lot going on in the background. And so what I think has happened is OpenAI, you know, really didn't have a great launch of GPT-5. I think it was going after a different market, which is less compute and frankly just like smaller instance size than what people were expecting, which is just like a massive leap in terms of capabilities. Then what you had happen is Gemini came out, and Gemini started beating all of ChatGPT-5 capabilities. All the benchmarks kind of started getting beat by Gemini. Google kind of started to slowly integrate Gemini into every single product. And I listened to Yano and Chow on the podcast, and Chow had a great line, which was like, I just did a quick search on earlier this year on like, what are my top applications? And it's basically like Google Suite, Google Search, and YouTube. And like, those are all owned by the same company. And now it's Gemini too. And so I think, you know, Google has really come back this year, and I think their stock's up like 65% this year or was last year. They have really come back onto the scene as a real dominant player in AI. Anthropic also has come back on the scene in terms of what their capabilities are from an enterprise perspective. And so maybe Claude isn't going to be like the consumer application that has 850 million, you know, weekly active users. That's okay, because they're going after a different game, which is enterprise, which they believe is where all the value is going to be. And I think the answer is probably it's both. You know, this market is going to be so big, you're going to have, you know, possibly $1 trillion outcomes on both sides of the equation. So OpenAI has been feeling it really over the last few months. And you also have that Foot and Mouth podcast that Sam Altman and Brad Gerstner did, where Sam probably wishes he could take it back.
I don't know if they've done an episode after that.
I do think that was the last one. I also remember seeing a few months later.
More news like this, please.
The head of PR and comms at OpenAI was moving on. So, there's definitely some stuff going on, but I think they're trying to right the ship. And I think, I think we talked about this on the pod last time, but Gavin Baker had a great line, which is, we have yet to see any models that have been trained by Blackwells.
Yep.
And OpenAI and XAI, so Grok will definitely be, a benefactor here as well. But OpenAI, because of their distribution, will be kind of the largest showcase to what the possibilities are with that. Whenever, I don't know if that's GPT-6 or if that's an improvement on 5, however they're going to do it, they're going to showcase that first. And what has happened is ChatGPT 5.2, the new reasoning model actually is now caught back up to Gemini. And so there are, I'd say, improvements that are being made. It's this horse race. It's the same thing that's been going on. But man, if you're a Thinking Machines or SSI, like, you're watching this happen from the sidelines. You're probably feeling like you're too far behind to really get in the game. And you may be a smaller player, which has a great outcome from a financial perspective. But I think ultimately all the people that we're talking about here are not caring about the financial outcome. It's going to be a large outcome for them either way. What they're talking about is being at the place when it happens. And if they're not in the middle of it, you're going to feel like you missed. And that I think is probably what a lot of these people are seeing. And there's probably a lot of, pull as well as push. Political infighting at these companies. Startups are tough, especially when you're talking about big personalities and big numbers. A little bit of a ramble, but those are my thoughts.
And I think the first cluster of Blackwells gets live this quarter.
Mm-hmm.
And I think what you're going to see is these AI data center companies, a lot of them are ex-Bitcoin miners, start to do better than people expect, or frankly, just deliver on promises. Like a week or two ago, CoreWeave was trading at like 2 or 3x sales for 2026, which no matter what you think of them, is probably too cheap. And they will need more financing. And I think you'll see stablecoins get involved, and that'll be a huge source of yield for stablecoins going forward. Just back on a crypto note, I just have had the BitMine in the top left of my screen, and the conference starts. There's this like Pengu video of Tom Lee as a penguin driving a Lambo around, like amazing hype video. It's like, the future of finance, the future of the creator economy. There's people like, there's like this massive stage he's on. There's all these people that are like diehard in the front row. I remember when one of our foreign LPs, gave us the Bitcoin bull case based on MicroStrategy being a cult. And I thought that was really unique, and I didn't fully kind of grasp the idea of cult stocks at that point. But and this isn't possible for everyone. Like, I think it's really only possible for, what are the commonalities of Saylor and Tom Lee? They've been around for like 20 years. They've there was a long period of time where Tom Lee was just getting like bullied on CNBC when he'd present things like tech bull cases or Bitcoin. I remember,
Tom, you're bullish again.
Look at you, you're back. And I think the call where he got most disrespected, probably I think unfairly, was he called for $20,000 Bitcoin. And he was like 2 years off, or maybe a year off.
Put that on a timeline. When?
Right. I think he called for it in 2017.
I think it was 2017. Exactly. Yeah. Or maybe actually
2018. And either way, he was 2 years off or a year and a half off. But Tom is the ultimate just add duration. You have a problem, just add a little bit more time horizon. I think he is a believer in the power of this kind of like stock collectivism in terms of like these cult stocks, but also just like technology. And even like this summer, I thought Tesla was going to go to zero because one of my friends was very short Tesla. And, I think just like the car business is really hard, and didn't fully believe the humanoid robots story. And I still think that will be a while, but he was very bullish. And I think he just has this ability to see through maybe like revenue gaps, or like, just the time and duration it takes for technology, matching that to an investing style, that if you have a permanent capital concept like a company, it just fits really well. And it doesn't need to be, there's rules, right? There's like investment company rules, which is this kind of long-winded way of saying you can't have more of 40% of your NAV in securities if you're a company. That's why all these treasury companies work. The underlying assumption is that they all have commodities. But if you have something with price reflexivity like ETH, that's a commodity with yield, it's just like this core equity layer of a company that can allow you to go off and put $200 million into Mr. Beast, run your ATM. And if you combine it with the Tom Lee personality, and I think Tom Lee, the commonality across his career is like most people, if they work at hedge funds or public equities for 20 years, are just really jaded boomers. But Tom Lee is always very nice. And even when they try to bait him on CNBC, he doesn't go for it. He's just like a nice guy. So nice guys finishing first, potentially. We'll see. But it's a great look, especially for ETH.
Yeah, and I think for the industry too, like Saylor has built strategy in this way that is this like Bitcoin behemoth. He's like he's not even really going to do like any options because he doesn't want to generate like he's like a purist, just like the Bitcoin
boomer. He's a boomer.
Well, let's say purist to be nice, but what you do have, and I think that this is kind of like a representation of the ideologies of Bitcoin versus Ethereum, is you have more experimentation. You have more, risk on at the edges, but a risk on perspective and sort of like a novel distribution perspective that people like Tom Lee embody and are able to capitalize on and provide a mechanism for investing in, which is BitMine. And it's not like you're going to see MicroStrategy off and put $200 million into a new Bitcoin hardware company or something like that, or anything related. As in the same way that I think the investment in Beast Industries is just a brilliant move. I think that you've got really sort of the core hard money perspective of Bitcoin, and that's what Saylor represents. But Tom Lee is the perfect representation of this, technology platform, this technology wave, this philosophical wave of decentralized technology that Tom Lee is putting into BitMine.
And he's got the Lighter founder, coming and doing a talk. He's got, I think generally the thought process of BitMine, at least according to this presentation, is like ETH is just the beginning, and we're going to buy a shitload more ETH.
Right.
So everyone get ready, but super cool to see it, and hats off to him for going there. I think the last one is probably Lighter versus Hyperliquid.
I think it touches on what we could probably call out as like valuations in general, and I think that we have talked about this, but the revenue meta is real, and the revenue meta is basically building businesses on chain. That is really kind of the direction that I think most assets are going. After 10/10 last year, you really have like a binary. Are you building a business on chain, or are you not? Do you have the potential to be a distributed mechanism similar to Hyperliquid that's got 99% of its revenue flowing back into a profit buyback? And that is the direction where most of these are going. Historically, that's been exchanges. So Lighter came onto the scene. I can't remember if they launched by the time we did our last pod, but they were right about at that launch date.
Not the token, at least.
I mean the Lighter token. And so that airdrop happened, that sale happened, like all the things kind of happened over the holidays, which was awesome to see. I think we're having more shots on goal. And it trades, I think, as of today at like 1.8 billion FDV. And it's an interesting concept. I think we're just going to continue to see these businesses being built on chain. Those are the ones that can ascribe the large multi-billion dollar valuations or sustaining values. And everything else is going to be troubled unless you have the ability to become an Ethereum, which is very, very hard as a platform with that much scale, or you're displacing Bitcoin, which no one's been able to do in almost 20 years. So you kind of have three options. You're either Bitcoin, you're a smart contract platform with the same scale of Solana or Ethereum, or you're building a business on chain. If you're building a business on chain, you're going to look and feel a lot like a growth stage tech company, and that's great. And I think taking it all the way back, things like market structure are going to be beneficial when that comes about. If not, or if there's a period of time in between now and then, I think the SEC Innovation Hub or some kind of sandbox is going to be the path forward. Where if you're doing the right things, if you're not trying to abscond with false information or do anything nefarious like that, you're going to be fine. You just got to kind of find the right regulatory path. So there will be a path forward for DeFi assets that have value accrual. Yep. And yeah, it's just exciting to see, more stuff, more shots on goal.
Yeah, more shots on goal. And there's nothing wrong with trading at low valuation. You do have to grow into a normal valuation multiple at a certain point. But also at a certain point, you do have to trade at fair value for people to actually believe any facet of your growth story. And the delta between those two, if you are not able to access institutional flows, is you have to buy back your own token.
Right.
And so it's a very simple math exercise of okay, find the marginal buyer. And that is something that you're just adding on top of a startup where life is already very hard and uncertain. But some can do it and some won't, but it's just the degree of difficulty is higher. I do think on the displacing BTC point, I think not to go back to BitMine, but they are repositioning ETH as probably on par with Bitcoin. If the two largest stats are roughly the same, I would say BitMine is higher quality and has more dynamism, and ETH is to Bitcoin what kind of Tom Lee is to Sailor at the moment, or at least BitMine is to MicroStrategy. It's got a little bit more motion, it's a little bit more exciting, there's more pageantry, it's more interesting, there's more optionality. Maybe the last thing to wrap up on is quantum, and not in the quantum stocks meaning. I don't know how those are doing. I can't imagine that well since I last checked, but I do think the ZK EVM pushing for quantum resistance, sooner rather than later. Nick Carter led an investment, and I haven't done full diligence into what this actually is, but he thinks by 2035 the risk of Bitcoin getting attacked by a quantum attack is 70-80%. So it's worth just thinking through if these things are supposed to last forever, what are the technology waves that they'll have to survive? If ETH is fully quantum resistant, and that looks like where the world is heading, it could be difficult for BTC.
Totally. I mean, look, I would think people in BTC land would come out if there is a solution to quantum, or if there needs to be a quantum resistant version, that will happen. I think we're still a ways away from that being viable. There's also so many other issues. If quantum is real, every single password you've ever written, every single bank account, all of your personal identifiable information, just
totally. But all of those places, I'm not worried about responding.
For sure.
There's my bank is my bank. I call my guy, there's a CEO. But Bitcoin, you can't call Satoshi.
Yeah, but it's not you can't, Vitalik can't necessarily do the same thing. There's more interaction.
He's on X saying he will, though.
Yeah, no, I get it. What I'm saying, it's not there's nobody working on Bitcoin. It's there are upgrades happening. It's they will do it. It's just a question of how, and how long would it take once it becomes real. I think broadly, though, the point is interesting, which is, we talk about, or I just said that there would be basically three different asset types. There's Bitcoin, there's basically ETH as a smart contract platform, and then there's basically DeFi with businesses on chain, or all different businesses on chain. The most likely, you're right in that the most likely outcome for anything displacing Bitcoin is probably ETH, just based off of the momentum that it has and the monetary premium that it has relative to the business or activity or whatnot. And I think if Tom Lee and everybody else is able to kind of rally around that, this could be the shot at doing so, especially at a time when the prognosis relative to size of ETF inflows and MicroStrategy buying may be relatively lower for the period of time relative to BitMine and ETH ETFs.
And the BitMine crew is a very motley crew. Like, it's Tom Lee right now. He's walking through Mr. Beast Industries investment. He's got a massive picture of Mr. Beast up, and Vitalik is coming on stage next. It's really a different crew. And he also just announced that he's doing these Tom Lee moonshots, which is equivalent to Google's other bets division. That's where like Waymo came out of. That's where all these other things like that is kind of what he will be doing. This is like what Mr. Beast's investment will be part of. So it's super cool to see people pushing this stuff forward. I think, probably watching this pod, you can tell we're pretty optimistic at the moment for all of this stuff. I feel like market structure will be a great narrative to kind of layer all the flows into. Still don't know who buys the long tail of altcoins, but we're not terribly interested in that at the fund level. And it feels like a pretty good time for crypto, all things considered.
I'm excited.
All right, should we leave it there?
Leave it there.
Thank you. Appreciate it.